On holding, known for its athletic footwear and apparel, reporting a revenue miss in Q4. Shares are down this morning, better than 17%. Joining us here at Post 9 in a first on CNBC interview, Marc Maurer, On Holdings co-CEO, and Martin Hoffman, co-CEO and CFO. Gents, it's nice to have you in the building. Thanks for coming in.
Thank you for having us.
Marc, is it about Forex? Is it broader than that? What's going on here in this first half?
I think we're not commenting on what's going on in the stock market. What we're doing is we're very much focused around executing on our mission, which is going to be being the most premium global sportswear brand. We're very happy with where consumer demand is. We're growing in running. We're growing apparel. We're growing on retail. And so I think everything that we're doing is according to the strategy and it's according to what we communicated. So very happy with where we stand as a company.
You can't look past what's happening with currencies, though, right?
Yeah, I mean, the Swiss franc just gained value against every other currency. But for us, it's about how many shoes do we sell to the fans. So that's how we measure success. And so we need to take this out. And as Marc just said, there we had a super successful year, 55% more volume that we sold in 2023. Very strong holiday season. We are a premium brand. We sell full price, high margin. We increased our profitability. And now we expect 30% growth in this year. And so that's above our expectation to double our business in the next 3 years. That's what we communicated. So we're very positive.
I guess, Marc, given that you're growing so fast and obviously therefore taking a lot of market share, can you get a read on underlying consumer demand or behavior at this point, let's say this year relative to a year ago?
Yeah, I think we understand it relatively well. We have very good sellout data from our accounts. We understand how consumers convert. And so consumer demand is there. I think our big opportunity is to increase brand awareness. We're still a relatively small brand compared to some of the bigger players. And so we have ample opportunity in the US, but also in Asia Pacific to increase brand awareness. This is where we will invest in. More people should get to know On. And then we have enough point of sales with some of our wholesale partners, but also with our D2C engine to convert that increased brand awareness.
You mentioned margins, and gross margins did improve, right? Is it 60 plus at this point?
Yeah, so it's 59.6 for last year. Our goal this year is to clearly be at that 60% mark. So again, it's a testament to the premium position that we have. It's a super strong margin. And now we have a lot of leverage in our SG&A to really improve profitability, economies of scale. Retail will be growing. The channels will change, more D2C. So this will drive our EBITDA, which is at least 16 to 6.5% goal.
We did see here, we got a US CPI number this morning where apparel was up 0.6 month on month. Some are arguing we're sort of wringing as much goods deflation as we can out of the goods market. Are you seeing cost pressures sort of reaccelerate or be stubbornly high?
No, at the moment I think we're in a good position. So we still have pricing power, and we can use this if we need to. But we are still growing, and we still have economies of scale also on the factory side. The supply chain, luckily, is in a very good position at the moment. So no congestions. We only have a very low share of air freight that we need. So that helps us to really now focus on executing the business towards the customer.
You mentioned a couple of times you're a premium brand. You want to kind of stay that way, I assume, with a link toward more performance. Does that limit things in the long term? I mean, in other words, not so much about fashion or casual, but it has to be, someone who's somewhat either serious or very aware of the branding?
No, we don't think it's limiting at all, right? So I think in the end, we're bringing a premium product, we're bringing a performant product, and we're bringing product that becomes more and more sustainable to the market. And we can do that in more and more categories. So we spoke about growing apparel. We see demand for apparel way above our forecast, which is very, very positive. And Martin and I are showcasing some of the pieces that will launch pretty soon too. And then we can, besides growing in running, we can enter new categories like training. We will, for the first time, launch a tennis collection around Roland Garros and the French Open. And so I think there's a lot of categories that we can still tap into and where we can continue to grow as a premium sportswear brand.
Speaking of that, I mean, it's getting a lot warmer here on the East Coast this week. Summer season will be here. People will start running outdoors. We'll have the Olympics in July and August. Is seasonality more pronounced for you than your peers, would you say?
We're a global brand, so things are setting each other off. And we are also basically catering to consumer that is running, but is also doing other kinds of sports. Right. So it's not a strong impact. But you mentioned the Olympics, so of course that's our big focus. So it's a big brand moment for us. Paris is very close to our home. So we have our On Athletics Club team ready to compete. Our tennis player, Ika Swiatek, Ben Shelton, ready to compete. And we have a big store already in Paris. We expect to open a second one on Champs-Élysées. So really being on the top street in Paris, present. So very excited about it.
Oh, that's good. Well, I'll be there. So maybe
I
you
will
guys
not.
can.
We'll meet you there.
Yeah,
I
we'll
guess.
catch up in Paris.
Okay. We'll do a store interview then.
In August.